Ladies and gentlemen, Meet Kevin's ETF is officially out, and oh my goodness, guys, this is kind of funny, considering the ticker symbol of his ETF is PP. No joke, it is ticker symbol PP, right? I can't even say that with a straight face. And I think that stands for pricing power or something like that. Yeah, pricing power. We'll talk about that later in this video. So in this video in general, we're going to run through the ETF. We'll look at the chart as it's now trading live in real time. And we'll break down what he's holding in this ETF, kind of my thoughts about it. So sit back, relax, take a sip of your coffee, guys, and let's just dive into the video. So there's been a lot of speculation over the past couple of months, maybe a year at this point, over a year. And I think Meet Kevin himself, Kevin said that he was going to launch an ETF at some point, and here it is. Again, ticker symbol PP. So let's get into it, guys. This is the Meet Kevin Pricing Power ETF, and I think this is stockhack.com, or it's mketf.com. Stockhack, so I guess his branding is House Hack for his real estate venture, and Stock Hack for, I guess, clearly the stock venture, which in this case is him creating an ETF. So when I'm looking at ETFs, guys, exchange traded funds, which if you guys don't even know what that is, it's simply a basket of stocks. It's not one stock. Well, I guess it could be two stocks, but it's a bunch of stocks. Usually, there could be a couple hundred, there could be 50 stocks in an ETF, 20 stocks, whatever it may be, right? And essentially, it trades like a stock in terms of, you could buy it and sell it throughout the day, and you could obviously buy more and more over time, right? And again, it's just a basket of stocks. And in this case, I think I forget how many holdings there are. Don't worry. Make sure to stick till the end. We're going to break all that down in this video. So let's just get into it, guys. Again, this is the Meet Kevin Pricing Power ETF. And whenever I'm looking at an ETF, guys, right off the bat is, of course, I want to see what kind of stocks are in the ETF. That's very important. I want to know what I'm investing in. But number two, I want to know what the expense ratio is. How much money am I paying to actually have this ETF managed? I also want to know, is the ETF passively managed, actively managed, which in this case with Meet Kevin's ETF, it is an actively managed ETF. So for that reason, typically with actively managed ETFs, the expense ratios are a lot higher. So in this case, let me see if you guys can see it under the key facts here. It says expense ratio 0.77%. And if you guys look at the prospectus, which we're not going to get into the prospectus in this video because, quite frankly, that document is very long and we don't have enough time to do that. But if you look at the prospectus, it breaks down the expense ratio a little bit more. But overall, 0.77%. That is a pretty big amount, considering if you just buy an S&P 500 ETF, the expense ratio is 0.03. So think about that. If you're looking at VOO from Vanguard, right? 0.03 versus 0.77. That is, I don't even know how many times more, a lot more than the expense ratio for the S&P 500, right? And it says here, fund inception on the 28th of November, which makes sense. I'm making this on the 30th of November. So let's see a little bit kind of what Mr. Meet Kevin here wants to do, what he wants to kind of accomplish, or, what this pricing power PP ETF is all about. So let's see. The Meet Kevin Purchase Power ETF, principles, investment, and strategies. The Meet Kevin Purchase Power ETF is an actively managed exchange traded fund, which again is ETF, actively managed, which means he's going to be in and out trading, doing all that stuff, that seeks to achieve its investment objective by investing primarily in the U.S. listed equity securities of innovative companies. And he's kind of going after the innovation, the future type of stocks here, like Cathie Wood, which you guys know, Cathie Wood's ETF, ARKK, the main one, has just been demolished. I mean, it's just been a complete disaster. And you may be asking yourself, what even, categorizes as an innovative company? Well, according to Meet Kevin, the company has to be involved in the development of new products or services, technological advancements, consumer engagement, disruptive approaches with respect to business growth that the sub-advisor expects to have a significant impact on the market or industry in which the company operates. So obviously companies that, are involved with technological advancements, disruption, again, kind of like what Cathie Wood was doing and still is doing. The Meet Kevin Purchase ETF generally analyzes pricing power based on price elasticity, which is the ability to potentially increase prices for products and services without a corresponding drop in demand. In addition, the Meet Kevin PP ETF may hold the securities of other ETFs, which could be passively managed or actively managed to seek to hedge against particular market risks anticipated by Kevin Paffrath, aka Mr. Me Kevin. All right, so let's see exactly what the heck is in this ETF. I don't want to read through all this junk right here. Well, not saying it's junk, but I don't want to read through everything for this video. Let's just go and see what is actually being held in this ETF. Then we're going to talk about the price action. We'll take a look at how the stock chart is looking like right now. So let's just do it, guys, and let me make sure you can actually see all of these holdings. So we can see here, as of now, the top 3 holdings are Tesla, Apple, and then 2-year treasuries. We can see here Tesla's at about 22% of the portfolio, Apple's at about 13%, 2-year treasuries at 8%, and then looking down here at the bottom 7, we have Taiwan Semiconductor. That one's familiar. Who just bought that? Mr. Warren Buffett did, right? That's about 7% of the portfolio. We have UDN at 5%, which I'm not even sure what that is. It looks like that is a bearish... Is that a bearish ETF? I don't even know what that is. I have to go look deeper into that one. But that's 5% of the portfolio. We have the Trade Desk at 5%, Enphase, Occidental Petroleum, Advanced Micro Devices, and Lululemon. So those are the top 10 holdings, and there's probably more than just 10 holdings. Let me see if I could download the full list of holdings. Wait a second. Is that everything? Looks like, oh, no, this is just, can you guys even see this? Yeah, if you guys take a look at this, I know this is not the most appealing thing to look at, but this is the downloaded list of his holdings here. Let's see. Apple, ADSK, AMD, CrowdStrike, Enphase, ERJ, Etsy's another one that wasn't mentioned there, NVIDIA, TSM we mentioned, UTWO we mentioned, right? So yeah, it looks like there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 or 20 holdings, depending on if I counted that wrong. So only 20 holdings, and obviously, as more people, invest into the ETF, more money is being pushed into it. There's obviously going to be more money flushed into these stocks that are the top 10, top 20, top 15, whatever it may be. So yeah, guys, I mean, if we're looking at the top holdings, I personally think, and you guys could disagree with me in the comments, please, but I think it's too heavily weighted, way too heavily weighted in Tesla, right? And I think when he was personally investing, I don't know if he has any personal holdings anymore, but, a year or 2 years ago, do you guys remember when Kevin's top holding was Tesla at like 80% of his portfolio, which is just unbelievable. And obviously, he's not going to do that if he's looking to start an ETF, have Tesla be 80%. I mean, nobody's going to want to invest in that. Or maybe the crazy Tesla bulls would that are just way, all in on Tesla. But for me, looking at an ETF, I want some more diversification. And I get it, me, Kevin's PP ETF here. Maybe it's not meant for somebody that wants a ton of diversification in a bunch of different companies. It's more catered towards, obviously, aggressive growth, companies that are the future, right? Innovating, disrupting, which in that case, you're going to take more risk. You're going to pay a higher expense ratio, but there could be a lot more reward later on. So it definitely is catered more towards, I'd say, people that want to invest into, again, disruptive companies. But 22% for Tesla, I think that's a little much. Apple at 13%. Apple's a great company, but at this valuation that it's at, in my opinion, it's too high. And having it be at 13, 14%, I think that's a little bit too much. Now, if Apple was 7, 8%, I'd be like, okay, that's definitely understandable. If Tesla was 10%, all right, understandable. But 22 and 13%, we're talking almost 40% of the portfolio, or the ETF, is in Tesla and Apple. That's way too much. I think that's a little bit heavy on those two large cap stocks. And then Taiwan Semiconductor, all right, 7%. I can't argue that, really. Maybe I'd have that maybe a little bit less personally, but all right, 7%. Occidental Petroleum, 4%. Okay, I like that. Enphase, 4%. All right. Lululemon, 4%. So really, a lot of these stocks, they're more kind of like ancillary positions to the Apple and Tesla, because again, those two make up almost 40% of the ETF. So what do you guys think about that? I think that's a little bit too overweight. I don't know, call me crazy, but again, you got to look at what this ETF is for. It's not for somebody that's looking to retire in a couple years or, later on in their investment journey. This is for somebody that wants to take some more risk, a little bit younger. I mean, you could be 40, which some people don't think that's young, but I think that's still pretty young. I don't know. In my opinion, you have to have a little bit more of a risk appetite to invest in something like this. So let's actually go and see what the chart is looking like, which obviously it just the ETF just came out. So I mean, it's not really moving too much, or there's not much price action because it's only been trading for a day or two at this point. But if you guys look, you can see there was a lot of upwards momentum in the aftermarket yesterday. I'm not too sure why this happened. Maybe Kevin made a video about it at that point. Probably that's what happened. I don't know. But it was, hovering 19.75, $20 a share yesterday in trading. And then again, after the bell, it shot up to $27. So it had a rip of 40%. Oh my God, 40% after the bell. And now it's down from that point a lot. It's pretty much right back to 19.95, $20 a share. Hovering at where it was yesterday in trading. And even today in the pre-market, it was at 22.50, and it is down from that point about 11%. From the aftermarket high yesterday, $27, it is down about 27%. So let's see, guys. I don't know. I mean, it's way too early to tell how this will perform. Are the companies held by the ETF garbage? Absolutely not. Very good companies, some very good companies that are being held, but I just think the allocation is a little bit too heavy. The weighting, rather, it's way too heavy on Apple and Tesla. That's just my take. I mean, who knows? It could work out. Who knows what's going to come into the ETF, what's going to go out of the ETF, because, again, it's actively managed, so that's an unknown. Who knows what is going to happen in 6 months, 12 months, 18 months. From what we've seen with me, Kevin, he changes his mind a lot, right? What happened, you guys remember what happened with him a year ago. He got a lot of flack for it. He sold out of everything in January, which in hindsight ended up being a good move, but I think from what I understand, he ended up buying right back into the market a month later. So, I mean, you can't really time the market, and from what I've seen, he's been all over the place kind of with his investing, his trading, which honestly might hold people back from investing in this, just understanding his history a little bit more. But who knows? Maybe people will start buying it. I'm personally not, full disclosure, I'm not going to invest in this. I'm not knocking me, Kevin. I hope he does well. I hope, I hope this works out for him. But me personally, I'm not going to touch it. That's my take. So if you guys found value in this video, hit that like button, subscribe. Let me know your thoughts in the comments as always. Seriously, I'd love to know your thoughts on this in the comments. And yeah, I'll catch you all in the next video. Check out my Patreon down below if you guys want to join it. If you want some free stocks from Moomoo, from Weeble, they're down below as well. I'll see you guys later. Cheers.